Have you ever wondered what would happen if the US dollar wasn't the king of money anymore? For decades, the world has run on a simple rule: trust the dollar. The US financial system was the bedrock of global economics. Countries stored about 70% of their reserves in US dollars, and US treasuries were considered the safest assets on earth. This system was designed to keep the dollar at the center of everything. Gold, historically money's ultimate form, was intentionally sidelined. Under old banking rules, gold was a Tier 3 asset, meaning banks could only recognize half its value. It was something to be stored, but not really used. But what if a major power decided to rewrite these rules? That's exactly what China set out to do. Their goal wasn't just to challenge the dollar, but to build an entirely new parallel financial system. A system where lending, trade, and development could happen completely outside the influence of the dollar and the West. The strategy was bold and direct. China and its allies would start selling their massive holdings of US Treasury bonds and, with that money, buy gold. The plan was to intentionally weaken the dollar's status as the world's reserve currency, chipping away at the foundation of American financial power. But this wasn't just about weakening an opponent. It was about building something new, with gold at its very core. But changing the world's financial order isn't easy. The biggest wall they hit was a crisis of trust, but not in the way you might think. In 2022, the world watched as the United States froze about $300 billion of Russia's foreign reserves. This single act sent a chilling message to central banks everywhere. Your dollar reserves are not truly yours. They can be seized, frozen, or turned off with the click of a button. Suddenly, the safest asset on Earth didn't feel so safe anymore. This triggered a global scramble. Central banks, especially in emerging markets, started dumping US treasuries and buying physical gold at a record pace. This was the perfect moment for China to propose its alternative to its BRICS partners: Brazil, Russia, India, and South Africa. China suggested using its currency, the yuan, for trade, backed by all this newly acquired gold. But there was a catch. When China proposed storing all that gold in vaults in China, the other countries pushed back. They said, "No, we've seen how this plays out," remembering how centralized control in the US had just backfired on Russia. They didn't want to trade one master for another. On top of that, gold had a practical problem. Its price swings wildly every day. How could you use something so volatile as stable collateral for multi-billion-dollar loans? The wall was clear. To build a new system, China had to solve the problems of both trust and volatility. Faced with these huge obstacles, China had a moment of epiphany. They realized they didn't need to replicate the old system. They needed to innovate. To solve the trust problem, they created the gold corridor. Think of it as an analog version of a blockchain. Instead of one central vault, they established a network of gold vaults across the BRICS countries. This meant the gold's custody was geographically decentralized. Any country could verify its gold was physically there and redeem it any time. This masterstroke solved the problem of trust. For the volatility problem, the solution was equally brilliant. Instead of using the daily fluctuating price of gold, China proposed using a moving average. For example, the average price over the last 200 trading days. This smoothed out the daily bumps, making gold's value predictable and reliable enough to be used as collateral for massive loans. But the real game changer was the final piece of the puzzle. Gold had already been upgraded under international banking rules to a Tier 1 asset, meaning banks could recognize 100% of its value. The ultimate epiphany was to push for the next, almost mythical level, getting gold recognized as a high-quality liquid asset, or HQLA. If gold achieves HQLA status, countries would no longer need dollars at all to finance their economies. They could use their own gold. With this three-part plan in mind, China went on a shopping spree. It became the world's biggest buyer of gold, not in secret, but for all to see. This sent a clear signal to the world. China is getting off the dollar, and we have the means to do it. They built the Shanghai Gold Exchange, now the largest physical gold marketplace on the planet. And this is where the plan truly comes to life. A country in Africa, rich in natural resources and producing a huge portion of the world's gold, can now deposit its physical gold into a vault connected to the Shanghai Gold Exchange Network. Then, the BRICS' own bank, the New Development Bank, can issue a loan in Chinese yuan against that gold collateral. This loan isn't for just anything. It's to build the roads, airports, and power plants that these developing nations desperately need. Suddenly, these countries have a way to fund their own development without going to the IMF or the World Bank. They can completely bypass the Western financial system. For China, it's a way to finance global development, expand its influence, and secure resources, all while building a powerful coalition of countries ready to move away from the dollar. It's a masterclass in economic statecraft, using gold to reshape the world map of power and influence. The United States, of course, saw this massive tectonic shift happening. The threat was no longer theoretical. In a quiet but significant move, the U.S. began the process of repatriating its own gold from vaults in London. Why? Because they understood that in this new game, where physical gold is real collateral, whoever holds the gold holds the power. You can't lend against gold you don't physically possess. This move shows the U.S. is preparing for a world where gold matters again. But the U.S. is facing its own colossal problem, a national debt soaring past $37 trillion, with interest payments alone costing a staggering $1 trillion every year. Russia and China have openly accused the U.S. of a desperate plan, using cryptocurrencies to potentially devalue or even wipe out that debt overnight, an act that would crash global markets. So, as China links its currency to gold, something physical, ancient, and trusted, the U.S. is likely to counter by playing to its own strength: technology. The response might not be to fight gold with gold, but to pair the dollar with programmable assets, tokenized real-world assets, or perhaps even embrace Bitcoin and stablecoins, creating a high-tech, digital-first version of money. Make no mistake, this isn't a forecast for the future. De-dollarization has already happened. The BRICS have already won this phase of the game. The shift is accelerating right now. We're seeing massive trade deals between countries like Saudi Arabia, Pakistan, and China being settled completely outside the dollar system. The dollar's share of global reserves has already fallen to its lowest level in decades, while gold's share is rising fast. We're not just going back to the future, we're going back to the original currency of humanity, gold. So, what does this all mean for the world, and for you? We are entering a multi-monetary era, a phase in history we've never seen before. Governments will now have to compete to define what money is. Gold is transforming from just an expensive, shiny rock into a powerful financial tool that you can lend against, borrow with, and build entire economies on. Think about this. If financial institutions simply increase their gold holdings from 20% to 30%, that 10% shift would create an estimated $2 trillion of new demand for gold. And unlike dollars, you can't just print more gold. This surge in demand could potentially double the price of gold within the next 5 years. The future of money is becoming a battle of two competing ideas. On one side, you have China's system, backed by physical, slow-moving gold, representing trust built over thousands of years. On the other side, you have the potential U.S. counter, backed by digital, fast-moving math and energy, representing trust built through technology. This isn't just a story about economics. It's a story about power, trust, and the very definition of money itself. The sparks from this $300 billion move have ignited a fire that is reshaping our world. Thank you so much for watching. What do you think the future of money looks like? Gold or crypto? Let me know in the comments below. And if you found this breakdown fascinating, don't forget to hit that like button and subscribe for more deep dives into the forces shaping our world. See you in the next video.